What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I found a real estate investment trust that is on fire. Its dividend growth is exponentially going crazy right now, and I cannot wait to show you the dividend growth. I'll do a full review on this dividend stock. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this dividend stock or REIT out right now. American Homes for Rent class. This is a real estate investment trust that has done very well. Average volume is 2.53 million. The market cap is 11.79 billion US dollars. G range is 28.79 to 41.51. Day range is 32.53 to 32.86, and its previous close was 32.82. Let's check these guys out. So looking at their portfolio, this is on the investor highlights. They have 57,878 properties owned in 30 plus markets in 21 states and 17 years. That's the average per home, and 1,989 square feet per home. 97% of the same home average occupancy days, and then 1,979 same home average monthly realized rent. So they've hit some pretty good markets. Seattle's one of them, that's 2%. This area down here in the southeastern area is what's really big. And, Raleigh, Charlotte's 6.8%, Charleston is 2.6%, Jacksonville is 5%, Orlando is 3.2%, Tampa is 4%, 4.7%, Houston is 4.6%, Nashville is 5.6%, and Atlanta is 10%. And you see over here in these regions, basically, Cincinnati is 3.7%, Columbus is 3.6%, Indianapolis is 5%, and Chicago is 2.8%. They're really focused on this eastern side. And right here is a top 20 AMH market. These are all of them that they listed. So this is one thing that's huge with these guys. Another thing that they mention, okay, is their strong rate growth supports 2023 expected home core revenues growth of 6% at the midpoint of guidance. Another year of continued strong demand with 2023 expected same home average occupied days of 97%. So this is one thing that's very strong. They're the largest integrated single family rental builder with 2,200 to 2,400 deliveries expected in 2023. That's another thing. 14,000 unit land pipeline creates opportunities for years of stable growth. They're the highest quality product and superior investment returns. Class A single family rental locations inside existing AMH footprint. They're number 41 on the Builders Magazine on the 2022 Builder 100 list. And right here, these two I like also, has recently agreed to increase the total capital capacity of existing joint venture and institutional investors advised by JP Morgan Asset Management to $9 million. So their wholly owned development pipeline strategy sized to be funded without the need of additional equity. That's one thing that I like about these guys. So I like also their three-pronged growth strategy. So they have traditional MLS acquisitions. Their development program is internal development program provides consistent, stable backbone of growth. They deliver superior quality homes in Class A locations with premium investment returns. 14,000 unit land pipeline provides opportunity for years of built-in growth. Existing wholly owned development pipeline strategically sized to be funded without the need of additional equity. So that's a few things that are very strong with these guys. The other thing I like is their strategy, their home quality, their value creation. So the AMH homes are constructed at significant discount to market value, resulting in immediate value creation. Their expenditure efficiency is solid. Their home quality also that they have inside the houses are good. And their design and create ideal rental homes and communities using data and insights from AMH's integrated development and operating platforms. So that's great, but there's a few more things. What I like in their data also is a consistent driver of earnings growth fueled by 14,000 unit land pipeline and locked in prices. So look at this. AMH development land pipeline, look at this. 2017 it was 2,000. Fourth quarter in 2022, it's 14,000 plus. So that's one thing that's very strong in their development of their land pipeline. So there's very good data, but let's go over the nitty and gritty with economic revenue and how these guys are as a company FFO wise, because that's important with the real estate investment trust. So this is their most recent news. American Homes for Rent came out with quarterly funds from operations of 40 cents per share, in line with Zacks consensus estimate. This compares to the FFO of 37 cents per share a year ago. These figures are adjusted for non-reoccurring items. A quarter ago, it was expected that this real estate company would post FFO of 39 cents per share when it actually produced 39 cents per share, delivering no surprise. Over the last 4 quarters, the company has surpassed consensus FFO estimates just once. American Homes for Rent, which belongs to the Zacks REIT and Equity Trust residential industry, posted revenues of $380.93 million for the quarter ended of December 2022, surpassing Zacks consensus estimate of 1.79%. This compares to a year ago revenues of $338.09 million. So there's an increase in revenue. I'll go over the revenue trends. This company has topped the consensus revenue estimates 4 times over the last 4 quarters. So right here, the American Homes for Rent shares have added a 9% since the beginning of the year versus the S&P's gain of 4%. So that's one thing that's very interesting regarding these guys. Now let me go over the revenue and dividend history. Revenue-wise, these guys have done pretty well. 2016, this is an annually in millions US dollars, 878, 2017, 960, 2018, 1,072, 2019, 1,132, 2020, 1,172, 2021, 1,303, and 2022, 1,490. So there is an increase in revenue, which is attractive. Now, let me show you the dividend history, which is beautiful. These guys are starting to put their name out there. And of course, this is not financial advice for entertainment purposes only, disclaimer in the description, but this is a hot real estate investment trust. Check this out. 2014, they were 5 cents to 2021, where they reached 10 cents. Then all of a sudden in 2022, they reached 18 cents. And then 2023, they reached 22 cents. So their dividend growth in the past 5 years is 41.97%. The number of dividend increases in the last 5 years is 3. So if you bought 1 share, you made 88 cents with a 2.68% dividend yield and a payout ratio of 46%. So I wanted to reveal this dividend stock to you guys because the growth is there. I wanted to do a little bit of an in-depth review, revenue-wise, with their trends and how these guys are doing as a dividend stock. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to try to squeeze in a video for you guys tomorrow. And I really enjoy the way this channel is going. I cannot wait until August when I graduate because I will try to post a lot of videos and go live and be really active with this channel. You guys take care and have a good one.